I'm Danielle Hale, Chief Economist at Realtor.com. With March Madness in full swing, I'm going to discuss the latest Fed meeting and what it means for mortgage rates, existing home sales, weekly housing data, rental trends, construction data, and most importantly, what it means for you. The Fed's Open Market Committee this week made no change to its policy rate, but it will unwind some parts of its balance sheet more slowly. In addition, the Fed released a summary of its members' economic projections. While the expected policy path is unchanged, members anticipate somewhat higher inflation and weaker economic and employment conditions than they did in December. These lower growth expectations are likely to hold interest rates, including for mortgages, down. Mortgage rates, which were largely gathered before this news, edged up 2 basis points, but have remained in the 6.6 to 6.7% range for the last 3 weeks. They're down from a year ago and also from their January high of just over 7%. While mortgage rates are not low, they are lower than they have been, a factor that likely helped push existing home sales up in February. Despite rising month to month, February sales pace lagged behind last year's fairly high bar, snapping a 4-month streak of yearly gains. The Realtor.com forecast expects modestly higher home sales from the low 2024 bar as inventory recovery gives home shoppers more options and more market power. The fact that mortgage rates are steady this year, at a time when they surged last year, will likely be an added benefit for spring shoppers and should encourage sellers aiming for the best time to sell, which is less than a month away. Realtor.com weekly housing data showed that listing prices flattened even as new listings and active inventory growth continued. The data suggests that March home shoppers will have more options and a bit more time to evaluate those options this year versus last. Households who aren't yet ready to buy will find some relief in the rental market. Rents fell for a 19th straight month, though the decline was less than 1%. A steady supply of new rentals helped drive the slowdown in rent, but that trend is shifting. Construction data show that multifamily starts and permits were lower in February nationwide, as builders have pulled back in the face of lower rents and policy uncertainty. When we dug into the data locally, though, we found construction pullbacks even in some markets where rents are rising. For example, in New York City, multifamily permits were down nearly 10% from their previous 5-year average, even as rents climbed 6.8% from a year ago, according to the latest Realtor.com data. This could mean extra rent pressure ahead in New York and the 8 other markets in a similar position. You can find all the details, including full reports and our housing data for download at Realtor.com/research. You can also follow us on X, formerly Twitter, for real-time updates and Instagram for graphics.